What up? It's your boy, the Options Boss, sliding up on y'all. Hope all is good. Hope you guys enjoying the week so far. Hope that infrastructure deal that Joe Biden is trying to get signed got you guys feeling pretty good in your portfolios. And I hope we're going to get some more of that to come today. That being said, guys, today I want to teach you guys a little thing in the stock market that if you master this, you will make yourself a lot of money every week. And I want you guys to make a lot of money, so of course I want to give you the game. Now, with that said, if you guys have not subscribed to the channel already, and if you have not hit the notification bell, go down below and do that right now. So when I drop these Get Money Jewels, you'll be the first to get it right off the press with no delay, and you can put these strategies in play immediately. So with that being said, guys, yes, I'm going to teach you a strategy. I'm going to teach you a game plan where you get free money basically every week in the stock market. It is an easy, simple strategy. It's an easy trade scenario, and it has a 100% win ratio if you do it properly. So yes, guys, if you cannot tell already, I am talking about selling covered calls. Guys, if you can master selling covered calls, you're going to make yourself a lot of money in this market, and it's going to be the safest thing you could do. It's safer than buying calls. It's safer than buying puts. It is super duper uber safe. You can't lose if you do it properly. And guys, as I do, because I'm the options boss, I'm going to walk you through how to sell a call on Robinhood, and I'm going to walk you through how to sell a call on Webull, because I know those are the two most common platforms, and I want you guys to have the tools you need to succeed. And I'm going to explain to you what you choose, why you choose, and how you choose it. And with that being the case, guys, you know I am not much of a Robinhood fan. I am a Webull guy. So with that being said, I am going to leave a link to Webull down in the description below. And if you guys would like to support the channel, definitely click on my Webull, sign up for Webull, and if you deposit $100 into your account, you will get 2 free stocks, and you'll be supporting me and the growth of my channel. So I definitely appreciate that. And the people that's already signed up for Webull through my link, I don't know who you guys are, of course, but I know someone has signed up. And for that, I thank you guys. Y'all are the best. Y'all are the greatest. Now, guys, the reason why Webull is the better of the two apps is because Webull has a customer service that's a little more existent than Robinhood. Webull has better charting. You guys have seen me talk about charting before and how important it is when buying dips and things of that nature. So Webull is better at that. Webull also allows you to trade as early as 4 a.m. Eastern Standard Time, which is wonderful, and allows you to trade as late as 8 p.m. Eastern Standard Time. So those after-hour hits that you take when you can't sell your company because it's already past the time on Robinhood, you can still sell on Webull. And those pre-market hits that you can't sell on, or the spikes that you can't sell on, you can sell it on Webull because you can trade as early as 4 a.m. Eastern Time, and 8 p.m. Eastern Time is the latest that you can trade to. So to me, it's a great proposition. And due to the fact that they have better charts as well and a little more of a customer service presence, I definitely prefer Webull. But guys, we're not going to get off topic. We're going to hop right into these covered calls, and we're going to start that off with Robinhood covered calls right now. Guys, we're over here on Robinhood, and the one thing I want to let you guys know is if you want to sell covered calls, you have to own 100 shares of a stock. So let's say, for example, you own 100 shares of AT&T. Then you would sell covered calls on AT&T. Let's say you own 100 shares of Apple. Then you would sell covered calls on Apple. And the key is, for every 100 shares, you could sell an extra covered call. So if you have 200 shares, you could sell 2 covered calls. 300 shares, 3 covered calls, and so forth. So I'm going to show you guys what the covered call process looks like. I'm just going to scroll Robinhood. As you see, we're over here. And let's see. We'll click on Facebook. Fine. So we'll click on Facebook and go to Facebook. Now, this is pre-market and Facebook is trading at $297.79. Let's say for conversation's sake that we bought 100 shares of Facebook on Robinhood at $2.95 a share. So what you would do is you would sell your covered call above $2.95 a share. And the reason why is because you want to sell your covered call at a price that if it gets exercised, you're comfortable with taking those 100 shares and selling it at. And if you sold it for less than $2.95, which we bought it at, then in that instance, you will lose money. So you always want to sell your covered call above the price you bought it at so you don't lose money. And as long as you do that, like I said, this is a 100% win ratio. Now, like I said, we're on Facebook, so I'm going to show you guys how that will go. So you click on trade, you click on trade options, and at the very top, you see the dates. And what I like to do is I like to sell weeklies. So when you're selling a weekly contract on a company, it's essentially like you're getting paid a free dividend. Like it's essentially like that company is paying you a dividend every single week. And guys, who would not love to get paid a dividend every single week? So with that being the case, it's very important that if you guys can, please try your best to own 100 shares of a company, if not more, because like I said, that every week dividend is great. So we're going to click on April 9th. And at the very top, you'll see buy and sell and call and put. So for the purpose of this video, we're going to go to sell and call. And when we click sell call, remember guys, we got these at $2.95 a share. So if we were to sell a call, let's say if we sold the $297.50 call, then what would happen is we would get the difference. If Facebook went above $297.50, we would get the difference once we sold these contracts, once they got exercised at the end of the week. So essentially, you would get $297.50, the difference between $2.95 and $297.50, which would be $250. On top of that, you would also get this premium on the right side, which says $4.30. And we know in options terms, that's $430. So if Facebook went from $2.95, which we bought it at, and finished the week at $300, then we would get $250 for the strike that we chose, and we would get $430 for the option price. Now, also, guys, if Facebook fell down to $290 this week, then we would keep our 100 shares in that instance, as opposed to the prior instance where we would lose our 100 shares but gain that money. In this instance, if Facebook fell below, we would keep our 100 shares, but we would still gain the $4.30, which we know is $430. So in this case, with this hypothetical trade, you either make $430 or you make $430 plus $250, which would be $680. So there's no losing scenario in this trade. Those are the only two things that can happen. Now, if you don't want to sell Facebook at $297.50, you could always go up further. So you could say go to $302.50. And if you sold the $302.50 calls, they're selling at $257, which would mean that Facebook would have to go over $302.50, and at the end of the week you get exercise, and you would get you would have to sell at $302.50. So you would get the difference between $295 and $302.50, which now you're talking about $750. And you would get the $257 premium. So now you're talking about $1,000 right there that you would gain in that trade. And like I said, if you pick the $302.50 and Facebook falls, you don't get the $302.50 because Facebook didn't hit that price, but you still collect the $257 for selling a call. That $257, that premium is yours no matter what the company does. So that's a great thing, and that's something that I really enjoy. Now, there is a little bit of a gray area, and the gray area is, let's say, for example, when you pick the $302.50 and Facebook runs up to, let's say, $310, you still have to sell your 100 shares at $302.50. So the difference between $302.50 and $310 would not be realized profits for you. That extra, what's that, $750, you wouldn't get that. That's $750 a share. You would not get that. But it's still a winning trade because you still bought a stock at $295 and sold it at $302.50, and you got $257 of premium. So you still bought a company and you sold it for a profit. You just didn't sell it for the max profit, but you sold it for a profit. And anytime we can sell for a profit, guys, that's a good thing. You never, ever, ever, ever in life will go broke taking profit. And I want you guys to remember that. But the key, like I said, you have to pick a call that's above the price that you bought the shares at. So guys, that's the Robinhood version. Like I said, I'm going to take you over to the Webull version. Webull is the better platform. It's the platform for traders who really look at charts and want that extra flexibility. And I want to show you how it looks on Webull. All right, guys. So I'm over here and I'm going to show you guys on Webull the same exact scenario. So let's say we own 100 shares of AMC. So guys, we would click on AMC. You see AMC is trading at 1021, 1027 right now in the pre-market. So we'll say for conversation's sake, we bought AMC at $9 a share. We have 100 shares of AMC. So you go to options down below. You see it says single option, both calls, puts, etc. And you would just click on the option that you want to sell. So for now, we'll just say the $11 option. And then you would hit edit. Once you hit edit, you'll see it pop up where they ask for all that good stuff. You get that done. So what happens here is you'll see it says short call, it says sell, and it says call. So this is what you're looking at. Now, right now, it's not showing a bid, a mid, and an ask, but it does say 7 for the limit price. So we're just going to play off this number 7 for instance. So essentially, if I were to sell the $11 call on AMC, then what would happen is I would get $7 premium because it says 0.07. So that's only $7. I would get $7 premium soon as I sold this call. And what would happen is if AMC finishes the week over $11, then my shares would get taken away from me, but I would have made the profit from $9 a share to $11 a share. So I would have made $200, plus I would have made the $7 premium. Now, if AMC finishes the week not over $11, then I keep my 100 shares, but I still get to keep the $7. And as you change the strike price, different strike prices will have, as you see, $3 at $12. Different strike prices will have different numbers that you could profit from. And this date right here is April the 1st, which is today, so it's a lot lower. But if we clicked on this date and made it April the 9th, now you see it's a bigger profit. So if I sold a $12 call for AMC next week, I would get $30 premium for that. If I sold an $11 call for AMC next week, I would get $47 profit. And the key is if it goes over this price, if it goes over 11, like I said, if it runs to 14, I still have to sell my 100 shares at 11. I'm obligated to do that. So I don't get the extra $3 profit, but I got the $47 premium. And if it does not run, if it, trades sideways, it finishes the week at $10, I don't got to sell my shares, but I still get the $47 premium. And then I get to do it again next week. And you keep doing it week after week after week. And that's the benefit of owning 100 shares and selling premium, selling covered calls on those 100 shares. You get money every week. And if you have enough of 100 shares of different companies, you can sell enough premium that you don't have to buy calls or puts to make money. And that's a great situation to be in because obviously buying calls and puts have a little risk involved with it. So I hope you guys can kind of see the benefit of how it's a 100% win probability for you to sell covered calls on the shares that you own, on the stocks that you own 100 shares. So guys, with that said, definitely if you enjoyed this video, if you learned something, comment down below, let me know. Make sure you subscribe to the channel and hit the notification bell and come join the team. You can always be a boss with the Options Boss. Guys, I'm a holler when I holler.